Good morning, good evening, wherever you are. Welcome back to another live stream here with the Everyday Growth Advisors in the morning and the evening. We are going to be summarizing the entire week. Perfect play out from the bearish scenario on the newsletter from last week. Hope you guys got a chance to read that one. And if you haven't yet, feel free to join the newsletter with the link in the bio on our Instagram. It's really easy to do. It's free and it's very, very informational. I think that it speaks for itself. So we had a very abrupt rug pull after retesting the 4,000 level multiple times, and we've seen that little move to the downside. Welcome, guys. Good morning, good evening. Now, as we get closer to the downside here, of course, we're going to have a lot more earnings coming in next week. In fact, just to give you a little insight on what are the earnings that are coming out from which sectors, here's a little chart that summarizes everything. In fact, here are all the near-term catalysts that you'll need to know about. So next week, we'll have about 16% of consumer staples reporting, 16% of financials reporting. Industrials, materials, and infotech will be heavy next week, as well as 24% of healthcare, and then about 20% of utilities, real estate. We have 10%, 12% of consumer discretionary, and then energy, 28%. The week after that is going to be even more crazy with 36% on healthcare, industrials, and 43% on healthcare, and then about 30% on infotech. So these next couple of weeks going to be really crazy. Not to mention heading on to the Feb 1st, that is the FOMC day. So that's also going to cause a lot of mayhem. Then we also have CPI, which just passed on 14 February. Next CPI, which is 14 February. And then ISM services that will come in on February 3rd. ISM manufacturing on February 1st. Double whammy right there. PMI manufacturing on February 21st and January 24th coming in next week. And then you have non-farm payroll February 3rd again. PCE deflator will come in on 27 January. And retail sales again on the 15th February. FOMC minutes on January 4th. So seriously, next 2-3 weeks are going to be pretty crazy in terms of all of the catalysts that will be affecting price action. Not to mention, look at all the infotech that is reporting within the next week and the week after. After that, it's going to go pretty flat. And we have industrials and financials that are going to be pretty heavy in the next 2 weeks as well. So that's going to be majority of the S&P 500 reporting all within the next 3 weeks. And then combine that with FOMC, it's about to be a firecracker, right? Not to mention today is pretty much the biggest options expiration on a non-quarterly expiration day. 20th of January is about 797 billion of single stock options, which will expire today. And then also from the index perspective, about $1.3 trillion of options that will roll today, which will make it the largest non-quarterly expiry on record. Expect a lot of possible volatility today. And also it'll be significant for ETF options, which about 514 billion will be notional to expire. So yes, that's a lot of things that are going to be happening today and into next week. So you have to be aware of those things. That's just from the news standpoint. Heading into macro, not really much has changed except for the market's perception of things. We had the rug pull after the market collectively decided that, oh, hey, we're getting a bit too exuberant. Then the Fed member came in to speak and a little bit of a rug pull happened. Of course, we were prepared with some puts right at the break of 39.75, 39.76. I believe I already mentioned this on Wednesday's live stream. So today's live stream being the last live stream of the week, we're going to go through all of the different scenarios and how or where we're going to go from here. So keeping it really simple, we have this dual zone right here at the 3,900. And the 3,900 has been defended pretty strongly before. We'll see if we can get a pullback here to 3,950. If we don't get a bounce here, then this crashing wave that we see is likely to continue downward and retest the 38.75, 38.50, and then ultimately back to the Hodor level, which is this strong 3,800 level. That's your possible bearish scenario. The bullish scenario here would be a climb back up to 39.50, retest 39.50. 39.50 is going to be the key pivot, and then catapult us up into the 4,000 back again to retest 4,000. So whichever way the market decides to blow, be prepared with that anticipated scenario and play it accordingly. Pivot to pivot, always remember that just plan the trade and trade the plan. That's the main thing that you have to do. Stick to your guns, make sure that you are controlling your risk, and just don't over assign. Okay, I've been going very light. Just so you guys know, I am down almost close to $10,000 this week. Why? Because I had to realize my loss on Apple, and I did mention last week already that I'm going to be doing this. I attempted to climb out of the hole, and obviously got myself into a couple of other scenarios that didn't go as well. Zoom and Enphase swings that didn't go so well. I took an Nvidia loss, small one. I took a SPX put loss. I took a Square and Tesla call loss. Yeah, it's been a really messy week. You're not always going to trade your best, trust me. And these market conditions are very volatile. So you're going to have to really control your risk. The only reason why I haven't completely decimated my entire portfolio is because I've been controlling my risk. You can see majority of these trades have all been put on with very minimal risk, except for a handful. Okay. So, NASDAQ with a very similar story. We're expecting, a little bit of a movement here, possibly like a bear flag forming here, and then maybe continuation to the downside. That $11,000 level will more likely be tested. I mentioned about 11,700 being a very key level for us to retest on NASDAQ last week. Right at that retest, we got the reversal. So right now, the more important level is this 11,000 level to the downside. And if we can break this 11,218 level, then that sends us down to there. Right? If we don't and we hold this level, then we go back up to 11,700 to retest those highs again before deciding the next move right here. Now, at the same time, IWM got wrecked completely. Small and mid caps were the ones that were the biggest loss because they were overbought in the past couple sessions. So these will be the ones that will see significant amount of risk to reward ratio to the downside, and we're hoping for that 180 retest before the next resumption to the upside on IWM at the very least. This is a very strong level. Even 177 would not be out of the woods for that downside scenario. If the upside scenario continues, we would have to retest 183, 184, and then bounce on that to get that catapult back up into 190, which has been attempted to be retested in the past. Looking at gold, doesn't look like it wants to stop. Looks like it wants to continue to the upside here, and will likely get up to about 185 before it starts to reverse. And the dollar index is continuing to kind of build a base here. We haven't really got that break below, which I was telling you guys about, at that 101 level, which we have been talking about in the past couple of live streams. So dollar index really just kind of making things a little more difficult here in terms of the consumer pricing parity. Bonds decoupled from the equities at last, right? If you guys have been reading newsletters, you've been reading about how I've been forecasting that bonds, this will be the year that bonds will finally decouple from the S&P 500 and the equity market. In other words, bonds will finally move the way that they should move, which is opposite from the market performance. And you can see that right at that sell-off, actually the bond market started to buy up, which is a good sign, right? And the reason why this is a good sign is because people will start to finally take risk in the bond market and start to actually provide liquidity to the system rather than take liquidity out from it. But this is also ahead of the FOMC, which can change things, and so therefore we don't want to count our chickens before they hatch here. Semiconductors went up for that test. Looks like it wants to come back down and then maybe reverse back up again. That would form a nice little reverse head and shoulder here if we can come down here and chop for a little bit and then send us up to the upside. That $230 level or so will be the significant neck in the line, 231 to be very specific, for that upside catalyst into 247 or so. The other sector that we are currently short is industrials. We have been short since yesterday. This huge wave down. They do report next week, and we expect industrials to underperform the market in terms of earnings. So therefore, taking that short trade and trying to ride that momentum to the downside. Of course, we'll be taking profits ahead of the earnings, and so we don't want to hold it into earnings. All right, that's all I have for you guys from the technical and macro standpoint updates. If you have questions, comments, you want to ask me to do a chart right now, go ahead, put in the comments right now so I can get to it. Apart from that, let me just show you a couple things that I'm looking at and see if there is any relevance. So Netflix with the earnings beat, or rather the strong resistance of subscriber growth, sent the stock up about, what is it now, 5-6%. One thing I'll tell you about options traders who are playing Netflix earnings, they're going to get absolutely Ivy crushed. There's no way that anybody's going to survive this, because I think that majority of people looking at the options chain decided that they were going to take at least a 10% upside play, and the stock's only up about 6%. Not enough of a move to cause that fluctuation in gamma to really give the edge here. So I think a lot of players are going to get squashed on Netflix earnings, waking up to it, expecting the options to be in profit, but actually finding out that they've been Ivy crushed. For those of you that don't know what an Ivy crush is, it's when the implied volatility of the options chain is extremely high. In the case of Netflix, this entire week it was sitting at around 150, with a day before the earnings peaking to about 200% or more. And what this does is it means that everything is very overbought. The options chain is overbought. There are people across all strikes and expiries for that specific week and the next week after that are buying all kinds of, or rather speculating on all kinds of moves. What this does is, right when the earnings are released and the market opens the next day, it causes a bunch of people running to the exit door at the same time. And that high IV that is once high, which is keeping the premiums afloat, drains and crushes because everybody leaves at the same time. Not only that, the fact that the strike price never reaches the spot price the spot price never reaches the strike price, causes a big fluctuation in gamma that causes the options premium to be completely destroyed. So that's a brief summary of what Ivy crush is. I just thought you'd be interested in understanding what that would be instead of me just telling you that they're going to get Ivy crushed. Possible, run your thoughts on Tesla. Absolutely, let's do it. Steven, thank you for joining us today. I appreciate you taking your time here. Once again, I appreciate you guys, so make sure you hit the like button for me. That will truly help me out a lot, serve the YouTube algorithm more people. 22 of you, let's try to get to 22 likes. Can we get to 22 likes today? That would really help me out. I would appreciate that. Okay, Tesla. Looks like for now it's still avoiding this downtrend. And it's really interesting because I think it has been obviously beaten down for a while, and it hasn't really been moving very aggressively down with the market. So I'm inclined to believe that Tesla does want to go retest the 61.8 at 139. It has been really, really nice on this uptrend so far, and with the market dropping aggressively, it hasn't really dropped with the market, which is showing relative strength to the market in terms of cadence. So to me, I would like Tesla to break above this, let's say 131.50 level, ignoring this big candle that got reversed into, and just play this 131.50 break to the upside at 139. And that break over there should give us enough gamma acceleration to play some maybe 135 calls or something like that if you want to day trade it. However, this is only on the basis that NASDAQ decides to make a move to the upside today. If NASDAQ decides to be weak or choppy today, this trade is not going to be valid, and Tesla will likely chop to the side, or it will start to sell off and finally break this downtrend. So if it does break the downtrend, then how do you play that? Well, if it does break the downtrend, then my advice to you would be to wait for the break to happen first. The last thing you want to do is take this short trade and then get squeezed with the market momentum reversing against you. So wait for the break down below this low here, which is going to be around 124.25 to be really exact. And if you wait for the break below 124.25, wait for the pullback. Wait for the pullback here for it to reject this level. It might get to 124.45. It might get a little higher to 127. What you want to see is the breakdown, the rejection here, and then the extension can be played to the downside. Okay? Until that happens, do not take the trade. That is what ultimate confirmation looks like. That is what trading looks like. That is what being patient looks like. And that is what you ultimately have to do if you want to really be proficient and disciplined. Okay? So that's my advice to you in terms of the Tesla trade. I hope that was helpful, Steven. Let me know if you need any other questions answered. Rich, DE shares to accumulate long-term when hit 402, 400, or wait longer into earnings season. Let's have a look. Deere, right? That's a Deere company. DE. Yeah, Deere and Company. Ooh, okay. So this one looks like one of those, if it continues to sell, it looks like a good one to do a CSP, right? A cash secure put. If you're going to buy the shares anyway, you might as well just get a bit of premium along with it. And so, yeah, I mean, I think 400 is a decent spot, but I think it could go as low as 392, 393 before it actually gets there. So you might want to wait a little longer, actually. Let this one play out a little bit before you actually get there. So get this down to about, yeah, you know what, 397, 398. This level here looks pretty decent for a possible buying scenario. So I would say around here, right? 397, 398. What I would do is right when you get there, sell a cash secure put. If it bounces and gets above, guess what? You earn the premium on that. If you get a sign, you get those shares at a cheaper price. Win-win situation for you. That's the way I would do that. If you wanted to really buy the shares around that price. So yeah, that would be my 2 cents on that, Rich. Hope that's helpful. Alex says, let's get to 50. Yeah, well, I hope we can get to 50. Trying to get to like, trying to get to 30 nowadays is pretty hard. But you know what? 30 likes would really make my day. I don't think we can get to 30 likes because we have 24 people watching right now. But hey, you know what? I never say never. Who knows, all right? One day it might happen. Thanks, understood your plan. No problem, Steven. Absolutely. Vail to the downside. I heard you say you were short industrials. Yeah, but Vail, isn't Vail a energy stock? Let me see. They do energy. Yeah, they do energy minerals, right? Right. No, I'm not short energy. I'm long energy for the time being. I have been long for a while. I've been long since we bounced. Actually, on this rejection here, I was almost stopped out of my trade, but I held the trade and it has been recovering pretty nicely. So let's see, if we can get that bounce on it. Now, so let's talk about Vail. Okay, so Vail is an interesting one, right? I think that this is a good one to also watch, right? Because, I mean, thanks for bringing this to my attention, by the way. So definitely looks like that W forming, right? Nice little spot here. And I think this is a good spot where you can really plan an efficient trade in terms of risk-reward ratio. So first of all, let me remove all this stuff because, I like to redraw my charts every once in a while. So nice little ranges that are forming here. This is a very nice, beautiful pattern, right? If you look at the weekly here, let's go back a little further here on the Vail. It looks very beautiful. So first of all, you can obviously establish this channel-like kind of pattern. It's actually squeezing right now, almost in like almost like a pennant. If you look at it, obviously there are multiple patterns that you could play over here, but I do like this one the best, right? And this one will give you probably the better understanding of how this one's going to move. So really simple to make it here. Okay, we do that real quick. Okay, so you can see pennant style. I love these. Okay, they're pretty much remind yourself one thing. I'm looking at the weekly chart here. Okay, so this price action is going to take weeks to play out. Every candlestick here is a week. If you go into the daily, then it's going to look a little more squashed. So if you look at the daily, then this is some easier way to look at this. Okay, so pivot point, really simple. This is your key pivot right here. Okay, 1880 or 19, right? 1880/19. Let's just call it 19 even. Okay, and the key pivot point here is going to act as a magnet, obviously, for a retest. So likely scenario is it goes up to retest the top of this trend line too, right? So you have about a two-level confluence here where two things are going to meet. Then you have a decision to make when it gets there. It either breaks out, comes back down to retest that level, and then you take the upside on it, which will give you the upside targets. Obviously, if you want to look at the upside targets, you can use the Fibonacci extension. This is the a new wave, so you can't use this wave. You have to use this wave that's here. You could either use this huge wave or you could use the smaller wave. I'll use the smaller wave for now. So looking at this here, boom, there you go. Your first target will be somewhere around 1950. This could be another level up here, right? This is another potential resistance. Okay, 1950, then comes 2050. So you have about $1, 50 cents first and then $1 after that. That will be your upside moves. So likely breakout scenario, retest. Then you get this first upside target, second upside target, third upside target, fourth upside target. These are all your upside targets. If you were looking at the bearish scenario, then the retracement after the rejection of 18.90 will send you back down. This will probably be around $18 net will be the pivot point here. And this will send you down into 17.20. So those are the levels that you have to watch. So I like the scenario where you break out here, consolidate, and then you play the upside. Or the scenario where you get up here, you reject, you come back down, you retest, confirmation, play the downside, right? That's a better scenario on both sides. So I hope that's helpful for you. Keep it simple, keep it easy. Don't use too many indicators on your charts, guys. It's not going to help you in any way. How the SPX looking for you, boss? Hey, Abel, I actually already broke down the SPX. But hey, after this video is over, if you just replay it, it's one of the first few things that I break down. So I'm not going to repeat it again because, it's not going to be efficient use of time. But once you refresh the page right after the stream is over, you'll be able to catch my analysis of SPX and all the macro and everything behind it. Gold, copper, aluminium. Give this man some likes, man. Thank you, Abel. I appreciate that, man. Really do. All right. Well, that's all I have for you guys today. I hope that was helpful. If you guys ever want to also buy me a coffee, you can. There is something called a super sticker or a super chat on the live stream, and that is also one way to support this channel. I don't usually, tell people to do it because I'm just trying to help people out as much as I can. But if you wanted to support the channel, you wanted to do something nice, that is one way you can do something nice. But I never ask for it because you know what, it is what it is. Heard, sorry chief, it's okay. Enphase. And we played Enphase yesterday. That was a beautiful trade. So this was Enphase yesterday. We played the entry on this break right here. Perfect entry. 245 is where we entered. We took some 235 puts. Played this entire wave down. I pretty much exited all at the red lines. These were the targets yesterday. So this morning it looks like it wants to maybe pull back a little bit, and it's a very high chance that it will pull back. So I think with Enphase, you got to wait for the pullback before you take any other moves. Don't try to catch this train to the downside. That train has already left. What you want to do is wait for the pullback and see where it's going to come to. Either 233 or it's going to come back to 230 net. How it's going to behave there and here is going to be very telling as to whether it's going to move further down or up. If it comes back and it starts to reject these levels up here, then likely to fall back down again. On the 4-hour and the daily chart, it looks like it wants to go further down and retest some of these levels on the downside here. The next level down that I'm looking at is around $200. This thing is fairly volatile, so you want to be really careful with it as well. I had shares of 170 and sold for profits. Oh, that's nice, man. That's great. Congratulations on that. So yeah, that's what I would do. I wouldn't want to touch Enphase here. Just it's oversold, or not oversold, but its momentum is already faded to the downside. Yesterday it was down 11%, and I want to wait for the pullback here before making any moves, either upside or downside. So that's my 2 cents on that. The key pivot point is going to be around 231 roughly. So I hope that helps you. Thank you, boss. Yes, it does look more bearish. Yeah, I agree with you. So wait for that pullback. If you think it's more bearish, then wait for the pullback before you take any other trades, because you want to see how the demand comes in after the supply has come in. Remember, if there was a one-sided move here, right? A lot of this was fairly one-sided. You can see the price action here has been pretty one-sided, right? And if price action drops or supply increases when there is very, very low quantity, which means demand is not coming in, then what you are going to see on the reversal is going to be a huge up wave, okay? So be very careful with that. Enphase could go up back to 237, 239, 241, retest all of these very, very easily. So be extremely careful. Just watch out for how it bounces, and then you can play it from there. Okay, guys. Well, I hope that you have a great weekend. I'm going to be sending out more information about EGA version 3.0. If you have subscribed to the early bird, you should be receiving email from me within the next 12 to 24 hours. And giving you guys more information about how you're going to be able to sign up for the course, which is up and coming in about 10 days from now. For those of you that have not or don't know what I'm talking about, we're going to be releasing our most comprehensive flagship course that is going to be coming out at the end of this month. I've been working on this personally for about 7 to 8 months, and I've put everything plus my master's and 10 years of trading experience into the curriculum. So if you're interested in checking out what it is about, go look at our Instagram page, go look at the link in the bio. There's an early bird sign up. You can sign up for the early bird and you get a 30% off coupon to use towards the sign up on the launch day. Apart from that, I hope that you guys have a good one. Please control your risk, don't take unnecessary trades, and I'll see you guys back on Monday for another pre-market live stream. Till then, peace out and take care. Bye-bye.